I really do think that things are going to get exponentially crazier. You got the Citibank analyst talking about $35 silver in the next 3 months, 38 over the next 6 months. I think that's conservative. The silver market represents the best investment I've ever seen. 10 years ago, gold was $1,200 and today it's $2,650. So gold has gone up just a little bit more than twice or double, or is it that the dollar fell by half? Which one is it? I would argue it's the dollar falling, not gold rising. And this is the point, is that, inflation is a killer, a stealth tax, and it's insidious.
In a surprising turn of events, several financial experts and institutions forecast a substantial increase in silver prices over the coming months and years. This bullish outlook is driven by a combination of factors, including inflation expectations and the metal's industrial applications. AndySchectman, a renowned business strategist and financial expert, has weighed in on the situation. His assessment is based on forecasts from major financial institutions, particularly Citibank. According to Schectman, Citibank's chief analyst is projecting silver to reach $35 per ounce in 3 months and climb further to $38 within 6 months. Adding credence to this bullish sentiment, UBS, another prominent financial services firm, has also raised its silver forecasts. The firm now predicts silver will hit $36 per ounce by the end of 2024 and maintain that level through March 2025. In a move that further underscores their confidence in silver's potential, UBS has introduced a new forecast for June 2025, setting an ambitious target of $38 per ounce. Michelle Schneider, Director of Research, shares an equally enthusiastic outlook on silver. Her bullish stance is rooted in 2 key factors: inflation expectations and silver's industrial usage. She emphasizes that it's not too late for investors to consider jumping into mining stocks and focusing on silver investments. With strong conviction, Schneider predicts that silver prices could reach the range of $35 to $40 an ounce. Schectman notes that 10 years ago, gold was priced at $1,200, and today it stands at $2,650, which he attributes to the dollar's decline rather than an appreciation in gold's value. Recently, gold has climbed above $2,650 as demand for precious metals surged ahead of the weekend, signaling a strong rebound after a recent pullback. This swift recovery underscores that the current bullish trend for gold remains intact, reinforcing Schectman's view on the dollar's erosion driving up gold prices. Before diving into the video, subscribe to our channel, hit the bell icon, and share it with others.
Poland has been one of the largest purchasers of gold over the last couple of years, and they've actually accumulated 420 metric tons of gold, and it puts them in an exclusive club amongst the world's largest gold holders. I think they have more than the European Union right now. And he says his plans are to have 20% gold holdings, and which is interesting too, because in terms of being more than the European Union has cumulatively, in the respect that gold has now taken over globally as the second most held reserve in central bank holdings, surpassing the euro. Which is interesting, and first time since the European Union has been, or the euro currency has been in existence. But he has publicly said that his plans are to reach 20% of the country's foreign exchange reserves in gold. And they asked him not too long ago why they're accumulating so much gold. What's the purpose? And the answer is very shocking, if you ask me. And is this a crumb? Kind of seems that way to me, and I'll let you decide for yourself. And I may have read this on your show once because he said it 6-8 months ago. The question is, why does the central bank own gold? And he says, because gold will retain its value even when, now get this, someone cuts off the power to the global financial system, destroying traditional assets based on electric accounting records. Of course, we don't assume that this will happen, but as the saying goes, forewarned is forearmed, and the central bank is required to be prepared for even the most unfavorable conditions. This is why we see a special place for gold in our foreign exchange management process. After all, gold is free from credit risk and cannot be devalued by any country's economic policy. Besides, it is extremely durable and virtually indestructible. And look at a graph. You have 180 years of nothing but zero inflation and the highest prosperity the world has ever seen, and growth. And that was when the gold dollar was backed by gold. And the minute the Federal Reserve came in and we unpegged gold in 33, the dollar has lost all its value and inflation has run rampant. And so those people are saying that are just talking heads and mouthpieces for the establishment. The bankers don't like it because it neuters them. It doesn't give them the ability to create money at the behest of their desires. But yet you go back and look, and yes, it was a different time. And so what? We had no inflation and great prosperity. And now we're supposed to believe that 2% inflation is normal. Why not negative 2%? The lower the standard of, the lower the inflation rate, the higher the standard of living. 10 years ago, gold was $1,200 and today it's $2,650. So gold has gone up just a little bit more than twice or double, or is it that the dollar fell by half? Which one is it? I would argue it's the dollar falling, not gold rising. And this is the point, is that, inflation is a killer, a stealth tax, and it's insidious. But, why not have no inflation? Well, the only time we ever had no inflation was the 180 years when gold was tied to money.
AndySchectman has shed light on the significant silver accumulation by three major global powers: Russia, India, and China. This trend will likely have far-reaching implications for the global silver market and could potentially drive higher prices. Schectman reports that the country has recently imported over 800 million ounces of silver. To put this into perspective, India imported an impressive 3,625 metric tons of silver last year alone. This growing appetite for the precious metal from one of the world's largest economies is expected to support global silver prices, which are already hovering near their highest levels in over a decade. China, another key player in the global silver market, is also making strategic moves. In 2021, China produced 3,400 metric tons of silver, cementing its position as the world's second-largest silver producer after reclaiming the ranking from Peru in 2020. However, what's particularly noteworthy is China's approach to securing silver supplies. Schectman also points out that China has directly purchased silver concentrate and door bars from Latin American miners. This direct procurement strategy bypasses commercial banks and exchanges, indicating a calculated effort to secure silver amidst increasing global demand. Let's get back to the interview.
That is indicative of the demand for silver. The Citibank, their lead analyst, Max Layton, he says, look, silver's up 35% so far this year. It's leading the silver or the metals complex, but that they expect it over the next 3 months to $35 and 38 or higher over the next 6 to 12. To me, those are conservative, very conservative. But this is a game that won't end well. You can't trade 2.9 billion ounces of silver per day in London, which is 3.5 times annual global mine supply, on this leveraged, ridiculous scam of an exchange, running into some serious problems when you have these sovereign nations standing for delivery. In the month of August, 8.1% of the entire silver float in London was delivered. The only reason they're able to get rid of or get away with this, in years past, they got away with it because the countries that are now draining the exchanges, using our suppression against us, who are now wise to the game and therefore quiet to the stupidity of the West, keep it as quiet as long as they can and just pickpocket whatever they're stupid enough to short, was they weren't coordinated or sophisticated or motivated enough to do it. They are now, and that's how they win, where 8% is delivered off the exchange, where this is a continuation of what we're seeing all around the globe. So ultimately, silver goes higher than anyone thinks possible. When you add into it, for the first time, a government officially saying it will be part of our reserves, this is a big deal. Look, you got to be out of your damn mind to be naked short in the silver market right now. And I think that you could argue that this is the gyrations of commercial banks that are trapped, that are getting squeezed and doing all they can to knock it down to cover their stale short positions. What we've seen is tremendous resiliency. Before, man, when they would step on it, they would step on its nuts and really step on it, and then its neck, and it would never come back. And it would take forever to come back. And now what you're seeing is immediate bounce back, wasting of ammunition, only making the ultimate outcome like a coiled spring or a beach ball. You push further and further and further underwater till when it gets past your hand, it knocks your chin off as it comes up. And that's the kind of demand that I would expect to see when you see a sovereign nation like Russia say this. I would argue India and China have been doing it without saying it. India has imported over 800 million ounces of silver in the last few years and really has been very quiet about it. China is the second largest producer of silver in the world, and maybe they're the largest. I mean, who knows how much they actually produce. But now, as we've talked about on your show, they're flying all around the globe and buying concentrate and doré bars, largely in Latin America, from the miners directly, disintermediating the marketplace, the commercial banks, and the exchanges, which provides cover to their acquisition, paying double what the West will pay for unrefined sludge, in essence, and bars that are crudely refined by the miners before they get full refined by the refineries. I told people in 2010, switch your gold to silver at a ratio similar to what it is right now. That I did do publicly. The first YouTube video I did, and a few months later, 7 months later, it was 37-1. I told everyone to do it at 85-1 7 months earlier because it was an anomaly. Much of my success in making calls like that have always been centered around identification and exploitation of price anomalies. But I guess we'll see where it ultimately goes. A lot will be more visible, I guess, in the next few weeks with the BRICS meeting.
The silver market is undergoing a significant transformation due to increased accumulation from major global players. Imports are expected to nearly double this year, driven by rising demand for silver over gold. As these dynamics unfold, the growing demand and strategic acquisitions indicate that silver's value and importance in the global market will likely rise further. What are your thoughts on the future of silver? Let us know in the comments below. If you found this video insightful, please give it a thumbs up and share it with others. Don't forget to subscribe and hit the bell icon for more updates. Thank you for watching.